Welcome to Subramani. Met a friend of mine. He has some money to invest, or he has. So he's a doctor, doing very well. He's also got some money from his parents and or inherited some money from some uncle. So he had a lot of money to invest, not small amount of money to invest. And I was sitting and talking with him, and he said, I have no clue what to do with my money. And I said, that's very surprising, because he's a self-made guy. He knows how to invest, he knows what to do. When I say self-made, I mean from an investing point of view. His father was a bureaucrat and would not even come anywhere near the share market. So this guy has built his own portfolio. So I said, what do you want to do? He said, look, interest rates are not very exciting, but they're inching up, which means I know I should not be putting money in longer term bond funds. So I put my money in ultra short bond fund. And I think equity markets are very expensive and I have no clue whether to invest. So I wanted to ask you whether it is a good time to invest. So I agreed with him. I said, look, it is really difficult, because many of the darling stocks are really up and high, flying in the market. You don't feel like buying them at this price, because you know surely that the markets will have to correct, and I have no clue when it will correct. So if you want to put a lump sum, it is a little scary. Maybe sitting in ultra short bond fund, maybe you could do an SGP or things like that, and that is not something which you should ignore. Because we all know that markets will fall and correct sharply, if at all, or it might fall very sharply, but it might recover slowly. So we do not know the pace at which we do not know the standard deviation. We know that in the longer run we will make money, maybe more money than debt. But over the next 2 years, it may be a great time to be preserve capital by being in ultra short bond fund and doing a very small SGP. So if you have 2 crores lying in the liquid fund, and you are doing, say, let's say 50,000 per month as an SGP, it does not really hurt, because you're doing a very, very small portion of your money. So even if you have, let's say, 20 lakhs lying there, and you say, okay, 5,000 rupees SGP I will do, you're doing only 60,000 per annum, and you will definitely get more than that as interest on your liquid fund, or appreciation on your liquid fund. Liquid funds have gone to almost 5.5-6% kind of yield. So this person on 20 lakhs would get about 1.2 crores. So, and that was my feeling about equity markets also, and debt markets also. I said, maybe you should do an SGP also into a gilt fund, because you know gilt funds will do well. Or being in floating rate is not too bad. Being in ultra short is not too bad, because the yields will go up there also. But floating rate will definitely go up faster than the others. But remember, floating rate may have already gone up in the last 6 months. So very difficult to pick an equity fund, very difficult to pick up a debt fund. He had no clue what, even in their debt, he did not even know which category. That brought him to the favorite topic of saying, why not I buy real estate, because at least it will be there if I need it for some reason. And I pushed back saying, if interest rates are high and it goes higher, what do you think will happen to profitability? Secondly, if all employees have gone away to their hometowns and can work from there, people are working today out of Trichy, out of Coimbatore, out of Baroda, right, all those places, there is absolutely no reason why they should work out of Mumbai, Bangalore, Delhi, right? They can always shift to Mysore, they can always shift to Lonavala, Pune. So real estate prices, especially office, is very difficult to guess, and real estate prices residential is also difficult to get, because the rental markets are just not improving, right? So many landlords I spoke to are have still not reached the pre-COVID rents which they were getting. They had to reduce it during COVID times. They are unable to increase it because there is just not enough demand. So if you have reduced your rent for your tenant, the chances are you may not be able to take it back in a jiffy, right? So with all those things happening, I had a heavy pushback even on real estate. So he had no clue where to go. And I said, that's the problem. Normally you have a problem as to where to go. So there is one fund which is the complete where to go, which is, whenever you want to go, you can go there, is the index fund. The advantages with index fund is it's always going to be there. There is no fund manager risk, right? Costs are low. So it has huge advantages. But the problem is, if they have some bad news, they still can't react to it. they had to stick to Yes Bank for a long time till it actually got removed from the index, right? So those kind of risks you run. But yes, investing in the portfolio makes sense. Investing in the index makes a lot of sense when you don't know where to park, but you're very clear that you have to park some money in equities. After that, you can decide, oh, telecom is doing well, pharma is doing well, and then you can choose your funds approximately right, and or as appropriately as you think you would do it, right? So is it difficult to do? Yes, it is difficult to do. But I told him that I seriously don't know whether you should be putting money in debt funds which are long duration or equity where you don't mind waiting for 8-10 years because markets could correct for longer periods of time, or to put in real estate and wait. Based on his asset allocation, he had enough money in all the three. Obviously, he was more oriented towards real estate. So not knowing what to do, I said, okay, so could I have recommended some stocks to him? Yes, I could have, but he's a doctor and he won't find time to do that, right? So he has a portfolio which is very touchy about, but he doesn't do much of activity. So it had to be a combination of ultra short bond fund plus STP, and I couldn't think of anything else because the market goes crazier and crazier. As you think, oh, market has reached its peak, it goes up even further. We could get a very huge hit of realization that what we are doing is right or wrong. We may get it with a very hard slap. So I think what makes sense is to pick good companies where you have decent dividend yield, where you think the appreciation will happen and your dividend yield will go down. Suppose you buy a share at a dividend yield of 9, it's a good PSU share and you bought it, and the price just go up. At some stage you want to sell, at some stage you think the dividends are good. Well, you just buy and hold, and then if the price goes up, you buy more. If the price goes down, you either buy more or take a view saying it's not working and you sell off. So good dividend yield companies, good market share, good dividend payout, when all this is there and it is not very expensive, maybe it's a PSU, maybe it's a private sector bank, private sector company, or a company which is a very old company, so you know about it but the younger generation may not know about this, right? So you pick up some of those stocks, just hold on and wait for the market to turn, or you be in ultra short bond fund. Thank you.